Heya Cryptozens. Tonight's show. Kwon's newest proposal. Yeah, he's got another one. Aid for Terra Projects. Yeah, there were a lot of people working on the Terra blockchain. They've got some help on the way. Luna's Bitcoin Reserve. Whatever happened to that? It's 10 p.m. Pacific time. The date is May 16, 2022. Welcome back to the Crypto Overnighter. I'm your host, Nick. The cover model for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night to bring you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. It's kind of funny because recently we were talking about this whole mess with Luna, and it was described as their DAO hack moment. And at the time, that could have been taken a couple of ways. One way to look at it is this massive scale of the problem. Much like the Luna Foundation Guard, the DAO was faced with a huge problem, one with no obvious and clear solution. Up to this point, Kwon has offered up a couple of plans. He came up with a plan that suggested minting a whole lot of coin to try to work their way out of this death spiral. At that point, it felt to me like they didn't really seem to have a plan at all, because minting coin to try to get out of a hyperinflation event just doesn't seem to be the best way to handle things. Well, there were others who felt the same way. Before long, another plan came out, and this plan seemed a bit more workable, so that's a plus. And that's another way that this situation is like the situation with the DAO hack, because when the dust settled and the damage was told in the DAO hack, they had competing solutions. And yet another plan came out of the devs suggesting they stand up a new Terra blockchain, but leave Terraform Labs completely out of it. Now, one solution that was put forth by a committee was put forth by Terra Builder Alliance, and they came out with their Luna Go Forward proposal. This plan had a brand new Luna blockchain being stood up, and this blockchain would be limited to 1 billion Luna. And that Luna would be distributed like an airdrop based on specific criteria. Now, 40% of that airdrop would be going to Luna holders, 40% to Terra USD holders, 10% would be going to what they called marginal holders, and then 10% to the developer pool. This idea got some traction. People started to support it, and so it was that Kwon, a more docile, more contrite Kwon, took to Twitter. And this time, his tone was a bit more humble, and he said some stuff. And then he proposed his variation of the Luna Go Forward proposal. Well, time passed, commentary was had, and then that brings us to today, the 16th of May. Today, Kwon got on Twitter and announced a revised plan. And this revised plan will be put forth in a new governance proposal on May 18th. And it is very much like the Luna Go Forward proposal. This plan would fork the Terra Luna blockchain, and then this blockchain would be called Terra with a token name of Luna. But it's not the old and busted Terra blockchain. It's not going to be linked to Terra USD at all. And here's where we get to another similarity to the resolution of the DAO hack. You see, as I said, when the DAO hack happened, there were a bunch of competing theories on how to resolve the problem. You see, someone stole a bunch of crypto, and then there was a vote held on what to do. Do you let the hacker keep the crypto, or you go back and kind of edit the blockchain to make it so appear like it never happened? And then that would make everyone whole. Well, if you've been around for a while, you know this story is the story that led to us having a coin called Ethereum and one called Ethereum Classic. And that's much like what they're proposing here. The OG version of the Terra blockchain will continue to work much as it can. It will be called Terra Classic, and it will continue to exist along with Terra USD. So if this proposal is voted in, then the new blockchain will go in on May 27th. But before that happens, there will be an airdrop, because under this proposal, Luna Classic holders will be airdropped Luna, and they'll airdrop Luna tokens for Terra USD holders and for the essential developers of the Terra Classic blockchain. But you know who won't be included? Terraform Labs. Under this plan, Terraform Labs won't get any of their own coin. their wallet will be excluded from the airdrop. That means Terra will be a fully community-owned blockchain. The split on the Luna tokens is different than the previous schemes. It's still capped at 1 billion tokens, but 25% will go to a community pool. 70% go to Luna Classic and Terra USD holders, and the amount that you get is based on what you're holding based on a series of snapshots. And then the last 5% will go to essential developers. Let's take a quick look at the markets. At the time of writing, the global crypto market cap is $1.28 trillion, which is down quite a bit from the $1.49 trillion of yesterday. It's down 3.79% in 24. The top 5 cryptos by market cap are Bitcoin down 3.9%, Ethereum down 5.16%, Tether, USDC, and Binance Coin down 4.9%. So we've talked a lot about the Terra blockchain. We've talked a lot about Kwon and the Luna Foundation Guard. We've talked a little bit about developers, and we should look at this a bit more because there are a lot of apps built on the Terra blockchain. It is a rich and full ecosystem. Much like investors, through no fault of their own, these developers have had their world ripped apart in the last few days. See, most investors who lost money due to Luna cratering, most of them can get more fiat currency. Maybe not all of them, but most of them have jobs of some sort that pay in the coin of the realm. Now, I know that there are people who invested their inheritance or whatever, but mostly people have a way to buy more crypto. But what about the developers? Because a couple of things come to mind. One, they're often paid at least partially in crypto. If they were being compensated in Luna, well, that's effectively workless by now, and that sucks all by itself. But their job, what happens to their jobs? Because the blockchain they're working on is statistically worthless at the moment. People are not investing big liquidity in UST or in Luna, at least not at the moment. So without that liquidity, where is the value? And they have customers too. What about them? What about the people who've been waiting on and planning for their apps to come out? And there's also games on the blockchain. What about the players in those games? These are all more unnamed casualties in the fallout of the Terra Luna saga. And as scary as this has got to be for those developers, there is some hope. These projects, already under incredible pressure, might be able to migrate to another network. And one of these networks is Polygon. Ryan Wyatt is the CEO of Polygon Studios, and today he tweeted out that Polygon was offering aid. They were working with some Terra developers already to migrate their projects over to the Polygon network. And he said, when they're ready, Polygon will help more developers out with the resources and capital that they need to make the move. According to Wyatt, the Polygon community, quote, is ready to welcome the developers and communities of these Terra projects. Sandeep Naiwal, he is a founder at Polygon, and his contribution was centered around what projects would be a good fit for Polygon. He also suggested that Matic could be used by community projects that need a common chain. Now, as part of that, he also noted that ZK rollups will be available on the Polygon blockchain soon. Now, another layer 1, Phantom, they have also offered their support and their aid to the Terra community. They said that they are ready to help any project or developer that wants to make the switch away from Terra. In their tweet, they also noted that they have a grant program, and that program is focused on integrations, marketing, and connections. NFTs are in kind of a holding pattern. The global NFT market cap is up over $10.65 billion. Sales volume is down 0.96 in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Otherdeed, followed by Bored Apes, CryptoPunks, DegenTunes, and CloneX. Now keep in mind, some of these collections have very volatile prices, so do your own research. And this has got to be one of the biggest questions on crypto Twitter lately. What happened to all that Bitcoin for the Luna Reserve? Now, we were talking about this just last night, when all of a sudden, next thing you know, they answer that question. Sorta, but not really. Let's take a look. The short version of the story is that the Luna Foundation Guard, or LFG, they had a bunch of Bitcoin, and they procured all this Bitcoin to shore up the defenses around the UST peg. They bought it to act as a reserve to keep Terra USD from losing its peg. Well, because of reasons, that didn't happen. They bought the Bitcoin, but they didn't have a solid plan for dealing with the Bitcoin in an emergency. So their best bet, which would have been a smart contract that would have connected the reserve to UST, well, that was weeks away. So for reasons, there were questions about what happened to that Bitcoin. Well, today's the day. The Luna Foundation Guard started a Twitter thread to explain what happened. They gave a summary of account of what resources, including Bitcoin and other crypto, the LFG had at its disposal. So let's just put it out there right now. That Bitcoin is gone, or at least 99.61% of it is. 80,081 Bitcoin exited the fund, and LFG confirmed it. In their tweet, they confirmed the sale of, quote, 33,206 Bitcoin for an aggregate 1,164,018,521 UST. So they had 26 million Tether on May 7th. That's all gone. They had 23 million USDC. That's all gone. Bitcoin, they have 313 left. So if you're paying attention, there's a bit of a gap. 80,081 Bitcoin minus 33,206 Bitcoin sold means there are 47,188 Bitcoin so far unaccounted for. And I have not heard where the rest of that Bitcoin is gone. And here's the difficult part on that. You see, LFG sent all of that Bitcoin to exchanges. And once it gets to an exchange, there's really no way of telling where it goes from there. So there's just some 47,000 Bitcoin floating around out there. Another thing I'm a little baffled on. They didn't throw everything that they had at defending Terra's USD peg. They had $11 million worth of Binance coin. They had $67 million worth of AVAX. And they didn't spend any of it. In a tweet, the LFG said, quote, consistent with its nonprofit mission and focus on the health of the Terra ecosystem, beginning on May 8th, when the price of UST began to drop substantially below $1, the foundation began converting its reserve to UST. Now, who did they sell that to? Hard to say. LFG hasn't said who the counterparty was. It's interesting, though. They managed to dump a whole lot of Bitcoin on the market without just utterly demolishing it, which is something of an accomplishment. But what's really something, though, is their other accomplishment. They turned a $50 billion ecosystem into a reserve balance of $82 million. That's kind of sad. And that's going to do it for us tonight. Thank you so much for joining us. I really appreciate it. If you enjoyed tonight's show, like, comment, and subscribe. Give us a glowing review. Do you have questions or comments? Reach out and let us know. The address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. And check out my other podcast, Crypto in 5 Minutes. We have 41 educational podcasts, 5 minutes to explain one concept in crypto. And as always, may peace